everyone joining us from around the world, whether where you are just waking up, midway through your trading sections, or winding down for the night. Welcome. On behalf of the entire WeMasterTrade team, we are truly pleased to have you here with us for the global live stream sections. My name is Daisy, and I will be guiding you through this exciting 2-hour journey as your host. Today, live streams is not just presentations, it's a conversations. This is a window into the ingenious room of one of the most fast-growing and forward-thinking funded trading firm in industries. And of course, I'm not here alone. I'm joined by two remarkable guests who have shaped what we MetaTrade represent today: skilled traders, mentors, and role models within our communities. First, let me introduce our composed, always insightful Vincent. Welcome, Vincent.
Thank you so much, Daisy. Hello, everyone, and thank you for spending your time with us. I'm truly looking forward to today's session. There's so much to cover, not just about trading strategies or rules, but about the full ecosystem that we MetaTrade offer, from how you start, how you grow, to how you earn. This is the kind of platform that doesn't just fund trades, it's build traders.
Absolutely, and next to him is someone who brings sharp analysis and clarity to every chat and conversation. She is strategic, she is sharp, and she is a real force in our trading space. Please welcome Scarlett.
Thank you, Daisy, and hello everyone in the chat. I'm genuinely thrilled to be here. What excites me most about today is what we are going to unpack everything, not just what we MasterTrade offers, but how traders can truly take advantage of each part of our system, from packages to promotions to scaling and long-term profit sharing. If you ever had questions or even doubts, today is the day to ask them.
And that is exactly what we're here for. Whether you are brand new to WeMasterTrade or already a part of our funded trader program, today's live streams is going to give you the full pictures, not just the highlight reels. Over the course of these sections, we are going to walk you through what WeMasterTrade truly is, what we believe in, how our program are designed, and why we are doing things differently from traditional broker or prop firm. Now, I want to be clear, this isn't about sales, it's about understanding. We want you to know what you are signing up for, what kind of structural support of your journeys, and how you can use that structure to not suggest but scale.
And speaking of structure, I will begin by sharing the story behind WeMasterTrade, how we were formed as a funding project, not a broker, which is a very important distinction. Unlike brokers who profit from volume or loss, WeMasterTrade is built on the belief that your success is our success. We invest capital in traders, cover the risk for them, and share profits only when you do well. That's the foundation.
Exactly. And from that philosophy flows everything we offer, especially our trading packages, which we will discuss it in detail. We will explain the logic behind each one, what kind of trader they ever look at our packages and thought, which one is right for me. Today, we will answer that.
And more than that, we will also do live comparisons between pockets. We will break down pricing, account size, maximum drawdown, consistency rules, and even payout side by side to help you make a fully informed decision. This is one thing to see numbers on the website. This is another thing to understand intention behind them.
Right, and once you understand the packages, the next question is always how do I stay compliant while trading? So we'll move naturally into discussing trading rules, which honestly is one of the most important parts of today's session. We'll explain what the daily loss limit is and how it's calculated, why you can close both flows and falling profit and loss, and how to avoid violating it, especially overnight. We'll go into the maximum total loss, the consistency ratio, and we'll even address common misunderstandings about trade sizing and risk for trade policies.
And we won't just explain rules in isolation, we will explain them in the context of live trading decisions. I will share some personal examples of mistakes, I made when I first started trading under further conditions. And how I adjust this? Because rules aren't meant to restrict you, they are there to protect the integrity of your growth.
And while we are on the topic of helping you suggest, we will guiding you through our current promotion plans, including limited time discount codes, trader support campaigns, capital opportunities, and how to properly qualify and submit proof. We will have some amazing response to our promotions, but also some confusion. So we will be showing you exactly what to do step by step.
From there, we'll transition into a discussion on our startup plan, which I personally think is one of the most underrated parts of the MasterTrade offering. Many people don't really like this, but we have a structural pathway in place. If you perform well consistently, you don't just get payouts, you actually unlock higher capital tiers. It's not just about getting funded once, it's about evolving into a six-figure funded trader.
And speaking of growth, one of the most powerful ways to build long-term income at WeMasterTrade is through our profit sharing model. This is the heart of what makes us different from the other rock firms. When you trade on a funding account and generate profit without breaking rules, we share that profit with you, up to 90%. But there's more to it than just the percentage. We will explain the full payout cycle, threshold, and timelines today.
Now, I know many of you watching today are traders. You are also educators, influencers, or people with a lot of network. That's why we also taking time to explain our affiliate programs, and we will do it transparently. We will talk you through how commissions are calculated, how affiliate referral are tracked, and more importantly, what you need to qualify for payouts, including a detailed explanation up to referees rules and minimum funding conditions.
This is especially important because we want all of our partners to feel confident and clear about their earnings. We're seeing a huge growth in affiliate activities recently, and we want to ensure everyone is promoting responsibly, understanding the terms, and building long-term income streams.
So, as you can tell, this is not just a survey level live stream. We are diving into everything: pockets, rule, promos, scale up packs, profit sharing, and affiliate opportunities, all with one purpose in mind: helping you make the most informed, empowered, and confident decision possible.
And we want it to be interactive, not just informative. So if you have a question at any point, please drop it in the chat. Our moderators are watching and we will answer as many questions as we can. Your voice matters.
And if you're watching this on replay, don't worry, we have left timestamp and summaries below, and you can always reach out to our team with any follow-up inquiries. Our support team is incredible and they really care about helping traders succeed.
And to wrap up this welcome, I would like to say this: WeMasterTrade is not just a platform; it is a commitment to build real trader, to create fair, structured, and scalable pathway for people around the world who are serious about trading as a professionals, not the game. So if you're here to grow, to understand, and to take action, you are exactly where you need to be. Let's dive into the journey together. Let's begin, and once again, welcome to the WeMasterTrade live stream. Thank you once again for being with us today. Now, before we dive into pocket trading rules and promotional mechanics, we want to take a moment to zoom out and offer you the full pictures of who WeMasterTrade really is, what we believe in, and why we built this platform the way we have. Because when you are putting your trust and your tradings into a company's understanding its philosophies isn't just helpful, it's essential. And so this next segment is about origins, intentions, and impacts. It's about how WeMasterTrade began, what value underpin the firm, and how those values translate into real tools and outcome for traders like you. And to walk through that, I'm joined as a way by two people who live and breathe these principles, Vincent and Scarlett. Let's start the beginning.
Thanks, Daisy. To truly understand WeMasterTrade, we need to understand why it was created. Unlike many workflows or brokers that evolved from traditional financial institutions, WeMasterTrade was born with a purpose-driven mission to give capable traders access to capital regardless of their background, location, or financial situation. We were founded in 2022 as part of WeMasterTrade Group, headquartered in Vancouver, Canada. While WeMasterTrade built its name on signal sharing, investor network, and copy trading tech, WeMasterTrade was designed to serve a more focused vision to identify, support, and scale high potential traders, giving them a pathway to earn professionally without risking their own savings.
And it's important to note WeMasterTrade is not a broker. It's not just a label, it's a fundamental difference. We don't profit from spreads or commissions. Our success is directly tied to the success of our traders. That's why everything we build, from our instant funding packages to our profit sharing model, is structured with alignment in mind. We take on the capital risk. We give you the roadmap, you bring the skill, but we also know that skill alone isn't enough, which is why one of our founding principles is education first. We don't want traders to blindly follow rules. We want them to understand the logic behind the structure. And that's why we invest heavily into the WeMasterTrade Academy, a training ecosystem built to take you from beginner to consistently funded professional.
And that academy is something special, with Scott rendering from in the introductory trading psychologies all the way to advanced risk calibrations and multi-asset strategy designs. The WeMasterTrade Academy isn't just about theories, it's about implementations. We design the curriculum to match the real-world trading environments within WeMasterTrade. So what you learn, you can apply directly to your funnel accounts. And to ensure that our system and contents meet global standards, WeMasterTrade is proud to hold an ISO certifications which confirm that our educational products and trader development program meet regular international criteria for qualified quality structures and learner engagement.
That certification is a big deal because it shows our long-term commitment to developing traders, not just collecting fees. In an industry where many so-called rough firms come and go, WeMasterTrade has positioned itself with real operational stability, compliance frameworks, and internal accountability. We are not here for a season, we are here to help build careers.
And we've seen that commitment is translated into real stories. If you visit our testimonial page, you'll find traders from Nigeria, Vietnam, Canada, the Philippines, South Africa, all talking about how WeMasterTrade helped them not just earn more but trade with purpose. They talk about passing challenges after years of struggling with retail brokers. They talk about finally being able to trade without the emotional burden of risking personal funds. We had students become full-time traders. We had women re-enter the finance world after career breaks. And we have young professionals from underbanked regions finally access the markets with a fund account. And that's the impact. That's what drives us.
And it doesn't stop there. The WeMasterTrade ecosystem is designed to grow with you. For those who want to stay engaged and up to date, we maintain a regularly updated blog sections where our teams of expert and education share weekly insight, trading psychologies, breakdowns, market reactions, and platform updates. We believe that learning never ends and we keep our trader informed. But let's also talk about the cultures. What's WeMasterTrade different isn't just isn't the product offering, it's the community mindset. We actively promote trader integrity respectful information and knowledge sharing. Whether you are in a Telegram group, watching our YouTube series, or engaging with us online support, you will see that we actually listen.
And I will speak honestly here. In many platforms, the trader is just a customer. At WeMasterTrade, the trader is the product. Your performance drives the business, your voice shapes the platform, and your consistency determines how far we can scale together. That mutual accountability is rare, and it's something we are proud of.
And if you ever doubted whether this path is real, whether a trading career is truly within reach, I encourage you to read the testimonials, take a look at our fund accounts, and connect with people who's gone through the system. The stories are real, the capital is real, the results speak for themselves.
And to summarize, we met the trades in a capital accelerators, a talent accelerators, and an education for trading institution. We are here to challenge the status quo of trading access, to build the system that rewards performance over promotions, and to create real scalable income opportunities for traders around the world, regardless of their starting point. This is more than a platform, it's a trading movement. And if you are ready to a part of it, today LiveStream will show you everything you need to know. Thank you, Vincent and scholars, for that deep and honest walkthrough. Coming up next, we will to take these foundations and connect it directly to our actual offering. What mean, that means we will be discussing all the different account packages available as WeMasterTrade, how they differ, how they design for, and what kind of results you can expect from it. Now, that's we explore who WeMasterTrade is and the principles we stand for. It's time to move into one of the most essential parts of the live streams, an in-depth discussions of on our account package. This is where all is all begin for most traders, choosing the structures that best align with their goals, their styles, and their current skill level. And when we say pockets, we're not just talking about the dollar figures, we are talking about the frameworks. Each pocket at WeMasterTrade represents a different pathway toward growth, and today we will talk you through all of them, what they offer, how they structure, and the most importantly, who they are designed for.
Exactly, Daisy. At WeMasterTrade, we don't believe in a one-size-fits-all model. That's why we build two distinct product lines for traders, the challenge package and the instant funding package. Each line includes a variety of account size and configurations because we know that traders come with different strength, risk appetite, and timelines.
Let's begin with the challenge model, a two-phase evaluation system built for traders who want to prove their skills before being allocated capital. Its structure, fair, and has become the most popular route for new traders entering the WeMasterTrade ecosystem.
In the challenge model, you begin with a simulated account, and your goal is to meet specific profit targets while staying within strict but reasonable risk parameters. There are three stages in total: phase 1, phase 2, then the funding stage.
Take for instance out a $10,000 challenge, a great starting point for traders who want to minimize upfront costs while building a track record. Let's break it down phase by phase.
In phase 1, you will need to achieve an 8% profit target, which is $800, without reaching the 5% daily loss $500, or a 10% overall loss limit $1,000. You will have unlimited time to achieve this. That's the key difference from many platforms. We don't pressure you with deadlines.
Once you pass phase 1, you move to phase 2 where your profit target drops to 6%. That is $600. The risk rules remain the same. And here's something unique. In phase 2, you already start receiving a 30% profit share if you exceed the target.
Finally, Once both phases are clear, you enter the funding account, where you trade with real capital, have no profit targets, and your profit share jump to 90%. That's one of the highest in the industry.
And this account is ideal for newer trader or experienced trader who want to start with lower pressures and learn the system. If you're still refining your strategy or want to get a feel for WeMasterTrade risk framework before scaling, this is the perfect package to begin with.
Now, for those who are confident in their strategies and want to start with the locked account side, we offer $25,000, $50,000, and $100,000 challenge package. The structure is similar to face the same 5% daily and 10% total lot limits, but the profit targets scale proportionally.
For example, in the 50,000 challenge, you will need to hit 4,000 in phase 1 and 3,000 in phase 2. While the targets are higher, the leverage remains the same, 1 to 100, giving you room to just adjust the position sizing.
And the $25,000 to $100,000 challenges are ideal for traders with more capital management experience, especially those looking to eventually scale into larger funding accounts. If you already passed all the rough challenges or have a strong verified trading history, this is a good step up.
Every challenge package comes with a one-time fee. For example, the $45,000 for the $10,000 challenge. This fee is refundable once you become funded and meets minimum performance conditions. And if you don't go great, you are eligible for a 30% reset discount to start fresh. What if you don't want to choose a challenge at all, but instead want to accept real capital immediately, get fast based purely on results? That's where our instant funding come into play.
And this is where WeMasterTrade truly sets itself apart. Our instant funding model is designed to give experienced, disciplined traders a chance to trade real capital from day one. No evaluations, no demo stage, just pure live trading packed by a structured, fair and transparent system.
And what makes it even more accessible is that you can choose from several different account types depending on your style, reference, and goals. Today, we are going to walk you through each of the 5 main instant funding packages: Standard, 51010, 510 510 no PC, and Customized. We will compare the details, but more importantly, we will help you figure out which package is right for you.
Let me set the scene quickly. All of our instant funding package give you a live trading asset from day one. That means no challenge fee, no evolutions. You pay once, follow the rules, and you are trading like capital. And every account, no matter the size, includes no time limits, up to 90% profit share, balance based limits, scale up plan toward $1 million, support for EA, swing trades, clippings, and even XFT. Now let's go pockets by pockets. And as you go, Vincent scholars, I want you to jump in with real advice. Who should actually choose which ones and what kind of trader you have seen success with it?
Let's start with the standard package. I always describe this one as the best friend for trader who just wants stability. You are getting up to 200,000 in capital with a very manageable 4% daily loss limit and 6% overall limit.
It's like that calm, steady account that doesn't push you to overtrade. And with the profit slip up to 90%, there's serious earning potential even if you're taking a slow and steady approach.
And how about a commission?
Competitive across the board. Forex at $4 per lot, gold at $4 per lot, index at $1, and stock at just 0.07 per lot.
And everything is allowed. News trading, escaping, weekend holdings, EAs, HFT, you name it.
So for the audience, if you are someone who trades regularly, understand your strategies, want a full range of access, and plan to play the long games, this is your sweet spot.
And it's perfect for intermediate to advanced trader who already know their age but don't want to start with a target price challenge. And if you ever had an account belonging due to unrealistic rules, you'll find the standard model refreshingly free.
I would also say it suits swing traders. The 4-6% risk profile gives you just enough flexibility to hold multi-day positions, especially with weekend holding fully allowed.
Alright, moving up here, let's talk about the 5 10 10s package that the same capital sellings up to $200,000, but you will now get 5% daily loss and why the 10% overall limits. Why does that matter?
That extra cushions is massive for traders who scale into position or take multiple entries per setup. You've got more room to breathe, especially in high volatility markets.
And the profit target here is also 10%, which aligns well with the risk window. Plus, you still get full support for scalping, EAs, new trading. It's a very trader friendly.
This is best for day traders, especially those trading assets like Nasdaq or gold that move fast. If you got a tested intraday strategy and just need some risk breathing room, this is your package.
And also for traders who want structure but don't mind having that profit target, the clear milestone motivate more people, especially if they are payout oriented.
Now here a personal favorite, the 510 euros. You get 5% daily and 10% overall loss, but no profit targets, none zero.
And that's a blessing for high precision trader. You are no longer chasing a number, you just focus on protecting equity and growing capital slowly and safely.
This one is loved by low frequency trader and snippers. If you enter 3 to 5 trades a week, this is your space. You're not penalized for patience, you're actually rewarded for it.
Who is for? It's for veterans, swing traders, risk conscious traders, and people who prioritize consistency over speed. If that's you, you will fry here.
And let's be honest, not everyone wants to hit target. Some just want to trade well and scale up cleanly. This is their home.
Now for the rule breakers, or rather, those who don't want to be evaluated on how even their profits are. The 5-10-10 novice remove profit consistency tracking, right?
Exactly, same 5-10 risk profile, but you're not required to keep your profit growth smooth. One big winning day is totally fine.
That said, trade copiers are not allowed in this one. So it's for manual traders only. And you need to trade responsibly. But for aggressive traders who sometimes hit big spike, this is the place.
And this is perfect for high risk reward traders or anyone who had issues with consistency rules. At other firms, you trade how you want, just keep it inside the drawdown box.
And last but not least, the customized pockets. This is what WeMasterTrade is saying. You know what you need, let's build it together.
You can adjust daily loss, overall loss to your liking. Plus, you can fund up to 400,000, more than any other account.
It's premium, flexible, and comes with all trading styles allowed, including EA's news trading, weekend holding, HFT, and more. And it's for top-tier professional and ex-hedge fund traders, signal providers, high-volume traders, anyone with a very specific structure in mind. This package lets you build it.
I always say if you try other models and nothing quite fits, do your own blue ring with customize. That freedom is rare.
And to sum up, every instant funding package we offer come with clear risk parameter, fair commission, this market access, and real profit potential. There are no time limits, and payout starts as early as 1 day in.
And no matter your strategy, scalping, swing, hour, or manual, there's an account that aligns with you. The key is picking the right one now, so you can start building consistency from the start.
And if you're ever unsure, our team is available 24/7 to guide you. But the real secret, pick the account that fits your discipline, not your dreams. The right fit always outperforms the biggest promise.
Up next, we will walk you through exactly how to protect your cows, avoid breach, and understand the key risk and consistency rules that power our entire platform. Alright traders, now that you have seen the pockets, let's talk about the parts that either make or break your cows. That's right, it's time to dig into the trading rules and how to actually stay compliant when you are funded. Because let's be honest, getting funded is exciting, but staying funded, that's where the game really begins. And the numbers one reason traders lose their accounts is come down to one thing, the daily loss limit.
Yes, the dreaded daily loss is the one root traders think they understand until it kicks them out of their account at 3:17 p.m. on a random Tuesday.
But here's the good news. Once you understand how it works, really works, it becomes one of your best tools for risk control. So today, let's break it down from top to bottom.
So what is the daily loss limit, also called maximum daily loss?
It's the maximum amount of loss you are allowed to incur in both lotting and close trades on any single trading day. If your equity falls below that limit, even for a moment, your account is automatically closed.
And the key things here is the daily loss is calculated from the higher of either your balance or your equity at the start of the trading day. That's really important distinction and this what drives a lot of people up.
Let's walk through a live examples. Imagine it's the start of day 5. Your balance is $105,000. Your equities, however, is higher, $107,000 because of open floating profit.
If you are on a 4% daily loss limit, we calculated it up the higher number, 107,000.
So 4% of $107,000 is around $4,000. That means your equity for the rest of that day can drop below $102,000 or boom, the account is gone.
Right, and I think this is important to point this out. The system isn't waiting for close, this is real time. Even if your trade is floating loss and you haven't closed it yet, if your equity dips below that threshold for even a second, that's it.
Now let's reverse it. Say it's the start of day 7, your balance is $100,000, but your equity is $99,000 because your open trades are slightly in loss.
Since balance is higher, we base the 4% on the initial balance, so 4,000.
So now your equities must stay above $96,000 throughout the days. If it drops to 95,999, auto liquidation kick in. No warnings, no morning calls.
And what happens if you break it? The system will send market order to close all trades, everything liquidates. Your account is disabled and you can't trade again unless you purchase a new package.
And here's the kicker. The auto close happens when the system detects the threshold will cross. But due to the market fluctuation, your final profit and loss might look worse than the actual threshold. That's because the system executes a closure based on price slippage at the time of liquidation.
So even if you only intend to take a $3,900 loss, once slippage spikes in goals or NASDAQs and suddenly it's $4,200. That's why we say don't write the X.
Alright, let's talk about how to avoid violating this rule because this is where the broke mindset kicks in.
First tip, know your buffer. Never blend trade to take you right up to the edge of your limit. Leave at least 10 to 15% room below the mad loss, especially in volatile markets.
Tip 2. Track your equity, not just your balance. I can't stress this enough. Most traders stare at their balance all day, but if you're flowing in loss, it's tracking your equity. You're heading toward a violation.
And tip 3 is use a dashboard or trackers. Inside WeMasterTrade, we provide risk dashboard that show your live loss status. Use them, check them, don't rely on memory.
Also, pause trading after a big loss early in the day. If you lost 3% in the first hour of London session, maybe it's time to stop and reflect, not try to revenge trade your way back up.
Another big one, trade smaller during news hour. If you're trading gold during NFP with full loss side, you're practically begging to break the daily loss rule. Cut position size and ride post volatility.
What are the top rookie mistakes you see when it comes to daily loss?
Number 1. Over leveraging. Trader opening position that are 5, 6, 7% of their account, thinking they will close quickly. But if the trade turns red fast, it's already too late.
Number 2, holding overnight without checking exposure. If you hold 3 trades overnight and wake up to a 60 pip gap, the daily loss could hit before you even open your eyes.
And the third, assuming that close trades are all trader matter, they are not. Remember, equity includes both floatings and closed positions. The total equity lies in your score.
I always say this to new traders. The daily loss rule isn't your enemy. It's your account's airbag. It's designed to protect you from doing something irreversible.
Exactly. First, discipline. You can be aggressive, but only within the box. And if you learn to trade inside that box, you'll last longer than 90% of the market.
And one last note, this isn't just about the rules, it's about trust. We make the trades from you because we trust that you will manage risk responsibly. The daily loss is there to protect that trust on both sides. So that is about the daily loss rule. We will taking a short break and don't go anywhere. We will be back right back. Welcome back, traders. In the previous segment, we covered the daily loss rules, and if you haven't already clicked once, you are missing out. But now we move from the daily boundaries to the absolute boundaries. I'm talking about the maximum loss rules, also known as your account stop loss, the lines that can't be crossed not just for the days, but for the entire life of your accounts.
And this is where a lot of traders misunderstand how the rules work. They think, well, if I didn't hit my daily limit, then I'm fine. But then a week later, they chip away at their account and suddenly liquidation.
The max loss rule is the last safety net. If the daily loss is your daily seat belt, then max loss is your airbag. If that limit is hit, it means the account is deemed unsalvageable under your current trajectory and it closes immediately.
So, what is it exactly max lot rules? Let's define it simply. This is the total maximum amount you are allowed to lose across all trades for the entire account if your equities, that is, your real-time capital, including open trades, ever drop below a certain percentage of your starting balance, your account is gone, period.
And unlike the daily loss, which resets every day, this one doesn't reset. It's cumulative, and you can lose 2% one day, 3% the next, and if your total loss across the life, that's it.
And the percentage limit depends on your package. It's typically either 6% or 10% of your initial balance, not your equity, not your profit, but the original number you start with.
Let's walk through a concrete example. Suppose you have an instant funding account with an initial balance of $50,000 and your max loss limit is 6%, which is $3,000.
That means your equity can never go below 47,000 ever. Doesn't matter if you made 1,000 yesterday, the total loss from your highest point back down to that threshold is what matters.
And remember, this rule includes both closed losses and floating losses. So if you lost $2,000 in closed trades and you have another $1,200 floating in red, your equity is now at $46,800,000. That's below the limit account closed.
And just to be clear, it's not about the net gains or loss across trades. It's about where your equity stands in real time relative to that stop loss fall.
Here's where it gets interesting and a little tricky. Let's say your account grew to 51,000. Congrats, you earned profit.
But your max loss limit is still based on your original $50,000 starting balance. So if your limit is 6%, the threshold is still $47,000. What changes is how much room you have to fall before you hit it.
Exactly. Now you have $4,000 in total buffer because $51,000 minus $47,000 equal $4,000. So your profits give you a cushion, but the floor never moves.
And what happens when you break it? Once your equity drops below that maximum loss threshold, even by a few dollars, all the liquidation triggers or trades are closed immediately at market price.
And again, like with the daily loss, if there's volatility or slippage, your accounts might close out below that line. That's just execution reality.
And more importantly, once it breaks, that account is permanently disabled. You will need to purchase a new package if you want to continue trading. No resets, no rollback.
Alright, let's get tactical. How do you actually trade inside this rule without constantly worrying about it?
First, track your total close loss every day. You should always know how close you are to your max loss floor. Don't wait for the dashboard warning. Calculate it manually.
Second, you use your profit as protection, not permissions. Don't treat floating profits as a great light to increase risk. Instead, consider locking in gains by reducing lot size. when you're ahead.
First, manage your floating loss aggressively. Even if you are positive overall, a single trade with poor stop placement can take you from safety to shutdown in a few minutes.
Fourth, stay cool when you are close. If you are down 5% out of your 6% limit, this is not the time to double down. That's the time to step away, pause, and rethink your entry.
The biggest mistake, underestimating floating drawdown. Traders go through losers and think, okay, I'm still got room, but they forget about the 4 trade floating minus $1,800.
Second, trader who trades recovery after a bad day. They lose 4% in one day, come back swinging the next day, thinking they will make it back, and instead take another 2%. Boom, violation.
And the third, that's if one hurts, ignoring slippage during major news. Even with a tight stop, new candle can get you through your limit.
The man loss rule is there for a reason. It's not there to punish you, it's there to protect you from yourself. Every successful trader I know see their stop loss, whether personal or institutional, is a non-negotiable boundary.
Right, it's a reality check. If you're consistently pushing up against your max loss, the problem isn't the rule, the problem is your system or your psychology.
As WeMasterTrade, we are not just giving capitals, we are teaching structures, and the max loss rules is what separates gamble from professionals. So remember, your max loss is percentage of your starting balance, typically 6% or 10%. It is calculated using equities, not balance. It includes both closed and floating losses. And once break, your chaos is gone. Coming up next, we will explore the consistency rule, why steady profit matter more than the big spike when it comes to growing, scaling, and getting paid.
If you ever make $5,000 in one day, then make $200 the next 4 days and wonder why your payouts got flat, this next segment is for you.
Let's dive into the rhythm of profitability and how to stay consistent under the WeMasterTrade model.
Alright traders, we will talk about the daily loss limits and we will just cover the maximum loss rule, two pillars of protecting your capitals. But now it's time to shift gears just a little and talk about not risk but about the results. Because here things is not just about staying alive in the game. As we trades, we want the traders grow, scales and actually earns. And to do that, you need to more than just winning days. You need something called profit consistency.
This rule right here, the profit consistency rule, is what separates a lucky spike from a reliable trader. It tells us whether you can make money over time, or if you're just hoping to pick one big winner and roll the dice.
And more importantly, it's also how we evaluate if a trader is eligible for withdrawals, profit sharing, and even scale up. So if you're funded and you're wondering why your payout didn't go through, this rule could be the reason.
So let's define it clearly. The profit consistency ratio is measures of how even your profits are from day to day. The more balance of your profits, the lower your ratio. The less consistent, meaning you have one giant profit day and then smaller or losing days, the higher your ratio.
The idea is simple. If 80% of your total profit came from one day, that's not consistency, that's luck or risk. What we want to see is traders who make profit day after day, even if it's small. That's what we can scale.
The formula is really straightforward. Take your best trading day profit and divide it by your overall profit since you started the account and multiply by 100.
And the formula is best day divide total profits multiply 100 equal profit consistency percent.
And just to be clear, Best day refers to your highest gross profit in a single calendar day. And total profit is the sum of all your gross profit minus any closed losses or open losses across the life of the account.
Let's say you had the following results over 5 trading days. Day 1 plus $100, day 2 plus $200, day 3 minus $50, day 4 plus $100, and day 5 plus $60.
That means your total net profit across 5 days is 100 plus 200 minus 50 plus 100 plus 60 equal for $10.
And your best day was day 2, that's a $200 profit.
So now we apply the formula and you get a profit consistency ratio of 48.78%.
Now, let's say your account requires 20% profit consistency, which is common. This trader is way above that, so they wouldn't qualify for a payout yet.
So even though this trader is profitable, they are not consistent enough. They have one big day that's make up almost half of their total profits. That's not sustainable. That's what we are looking at.
And this is where I really want to speak to traders. If you are relying on 1 or 2 big days to carry your entire account, that's not professional trading. That's volatility. You can get lucky, but you won't stay funded.
And remember, it's not just about your payout this week. WeMasterTrade evaluates your consistency over time. Traders who show long-term balance are the ones who get scale up, who get fitter, who get strategies with more capital.
Alright, let's address the numbers. What's an acceptable profit consistency ratio?
Typically, the rule is set at 20%. That means your best day should not exceed 20% of your overall profit. So, how to improve your consistency? Let's say you are over the limit, don't panic. You are not disqualified, you just need to keep trading and even out the curve.
Here's how to do that. First, trade smaller size for a few days. Second, you can take smaller control wins, aim for 200, 300 days. And third, avoid big swing trades that could spike your ratio again. And lastly, spread profits across multiple days, not one monster setup.
And for those using EAs, monitor your equity curve. If your EA is skewing profit heavily into one day, you might need to rebalance it. The box might be profitable, but it won't pass its rules unless it is configured with payout logic in mind.
And a common mistake to avoid: mistake 1, traders hitting target early and taking the rest of the week off. That inflates your best day and leaves the rest of your curve flat.
Mistake number 2, over trading after a big day, thinking I'm safe now and trying to swim more instead of averaging out the high ratio.
And mistake number 3 is thinking this rule is just a hurdle. It's not. It's a reflection of what we actually look for in our master trading.
At the end of the day, this isn't about controlling you. It's about building habits that can handle scale. If you can be consistent with 25,000, what happens when we give you 1,000 or more?
Exactly. Consistency is what makes you safe to invest in. At WeMasterTrade, we fund traders, but we also study them. This rule tells us whether you're serious about long-term trading.
And we've seen it time and time again. The traders who respect the rules, they are ones who get multiple payout, referrals, and grow into 6-figure funded accounts.
So don't fear the rule, understand it, use it as a feedback tool. If your ratio is too high, great, that means you got profit. Now keep going, balance it out.
And remember, you don't need to calculate it manually. WeMasterTrade dashboard calculates your profit consistency ratio automatically. You can check it at any time under your Statistics tab.
To recap, this rule is about balance, not volumes. And to keep your best day under 20% of your total profits, spread your wins across multiple sections and monitor your progress in the dashboard. We will work through the daily loss limit, tackle the maximum account loss, and examine how your profit consistency shape your long-term payout and growth. And now we arrive at the finals and perhaps most overlooked rules of all, the risk consistency rules, or what we call the risk apply test.
That's right. Traders often think the biggest enemy is the market, but truthfully, it's inconsistent, especially in how much you are risking from one trade to the next.
This rule doesn't look at how often you win, it looks at how stable your risk is and how professionally you're managing your position sizing. And if you're serious about scaling at WeMasterTrade, this rule is non-negotiable.
Let's break it down. As a score, the risk consistency rule is simple. You are not allowed to risk more than 2% of your initial account balance on any single trade idea.
And that includes all losses associated with that trade idea, both log losses and floating losses. Even fees, commissions, and swap are counted.
And for some accounts like the 510 no PC package, this rule gets even stricter. There, the limit is 1% per trade, not 2%.
Because consistency isn't just about the outcomes, it's about the process. The more erratic your position size is, the more volatile your equity curve becomes. That makes you hard to scale.
This rule protects both you and the firm. It helps reserve capital, prevent large equity swings, and make sure your edge plays out over time.
Think of it as your account heartbeat. If your position size pulls up and down, zero point 0.5 loss one day, 5 loss the next, the system flexes. That's not structure, that's chaos.
This is where it gets technical, but stay with it. The term trade idea isn't just one order, it's still a group of trades that share the same logic.
If you open three buy positions on each AUUSD go at different times, that's one trade idea.
Because it is the same symbol, same direction, and close around the same time. Even if you open them at different times, they are seen as a single, unified position from a risk perspective.
So the system doesn't look at your trades in isolation, it groups them into logical bundles and applies the 2% rules across the entire bundle.
You can have multiple separate trade ideas as long as each one respects the risk limit.
For example, if you go long on gold, short by GBP, GBY, and short on AUD/USD, and each position has its own distinct direction and assets, there are three separate trade ideas, and each one can be used up to 2%.
Let's say you go buy on gold and then you go buy again and again. Now you have three open positions in the same directions on the same axis.
Yeah, the system treats that as one trade idea. So if the combined floating risk or eventual loss from those positions exceeds 2% of your starting balance, boom, you've broken the rule.
Another mistake? Opening multiple gold buys, then closing one 10 minutes later, and two orders together. The system still group trades close within 3 minutes of each other. So be mindful of your close timing.
Let's go hand on. Suppose you have a $100,000 account. The 2% max risk per trade idea means you can't lose more than $2,000 on any trade idea total.
So you open two gold buys, one lot each, and you don't play a stop loss, news hit, market drop 100 bips, each lot lose $1,000, that's $2,000 total.
You write on the line, you slip page or swap as a few extra dollars, that's it. Rule broken, account flagged or liquidated depending on enforcement model.
And On some accounts, especially instant funding account with stricter tolerance, these breaks may result in loss of funded status or immediate closure.
So, proceed to stay risk consistent. Tip 1. Set your loss size based on account risk, not emotion. Know how many pips equal 2%.
Tip 2. Use stop loss orders religiously. Set them based on risk trade idea, not random chart levels.
And tip 3 is don't stack traders without calculating combined risk. Just because one position is below 2% doesn't mean risk of the amount.
Tip 4. Label your trade ideas mentally. If you're entering on the same setup, treat it as one, size it accordingly.
Tip 5. If you want to split an idea into multiple entries, do it smart. Scale in smaller. Use micro loss if needed. Keep the total exposure below 2%.
The most common reason traders break these rules, stacking multiple entries on one trade idea thinking is still separate.
Second, opening high risk trades after win, assuming they are playing with house money. Spoiler, the market doesn't care.
And the cost in neglecting floating loss. A trade may not be closed, but the floating rate still counts toward your 2% rate.
This isn't just policy, this is of professional practice. Hedge funds follow this, banks follow this, and real traders follow this.
Exactly, we're not here to micromanage you, we're here to protect your account, our capital, and the integrity of this community.
And traders who internalize the rules, who understand that small, consistent risk is the foundations of scalable capital. They are the ones with growth. They are the traders who go from 25,000 to 1 million.
If you want to be a professional trader, you have to think like one. And the professional trader always know how much they are risking on every trade, every day.
And if you're still guessing your loss side or opening trades because setup feels right, take this as your sign, set it up, get structured.
This is more than the rules. It is habits, do it now, and the path to bigger capital and lower buyout become way too more predictable. And that's, my friends, wrap up the 4 essential rule trading that WeMasterTrade includes daily loss, maximum loss, profit consistency, risk consistency. Mastery, you are not just staying compliant, you are building a foundation for serious capital management, long-term buyout, and scaling. You are watching up the official WeMasterTrade live streams, and the best is still to come. Alright traders, this is it. You will make through the risk through the profit conditions and the structure of our accounts. Now let's talk about why it's all worth it. Because at the end of the day, we know that every trader really wants
More capital, more room to trade, bigger loss, higher rewards, without ever putting your own money at risk.
And that's exactly what the WeMasterTrade Scale Plan is built to provide. This is your roadmap from being a small account trader to managing a $1 million funding account. Additional is a clear path with defined milestones.
the Scale Plans is our performance-based growth program. At your trade well, meaning you hit your targets, avoid violations, and demonstrate risk controls. We increase your capital allocations. In other words, you earn more room to trade without spending more out of pocket.
And let's be clear, this isn't tied to subscription models or gimmicks. You don't pay for scale up, you earn it through consistency, profits, and discipline.
And the scaling is aggressive. We're taking doubling, tripling, and eventually scaling you all the way to $1 million in funded capital, depending on where you start.
As WeMasterTrade, we offer 2 types of scale-up plans depending on your account size. One is percentage-based scaling and 2 is amount-based scaling.
Let's start with the percentage-based plan. You begin as an evaluation trader level 1, with 100% of your base account. Hit the 20% profit target with profit consistency, and you are remote to level 2, where your capital increased by 50%.
From there, the growth explodes. Level 3, 300%. Level 4, 600%. Level 5, 1,200%. Level 6, 2,400%. And finally, maximum is $1 million.
And for each levels, you don't just need to hit the profit targets, you also need to complete at least 2 payout cycle. So the system knows you are not just performing, you are stable.
Now, for instant funding account, the scale up works with set dollar target, and the plan adjusts depending on your initial funding size.
Let's take the $10,000 funded trader as an example. Here's how the level look. Level 1 is $10,000, level 2 is $15,000, level 3 is $20,000, level 4 is $60,000, level 5 is $120,000, level 6 is $240,000, level 7 is $480,000, level 8 is $960,000, and level 9 is $1 million.
Each step has its own profit target, usually 10 to 20%. Some levels require profit consistency, especially in early stages. Once you are beyond level 3 or level 4, the consistency requirement drops, and it becomes all about raw performance and discipline.
If you start with a 25,000 account, your first profit target is 5,000. Hit that with consistency, you are bumped up to 37,500, then 55,000, then 150,000, all the way to 1 million.
And don't worry, don't lose your account if you don't hit the target fast. There are no time limits. You grow at your own pace as long as you stay within the rules.
So to move to the next level, here's what you need to do. Reach the specific profit targets, avoid all violations, especially max loss or daily loss, complete at least 2 successful payouts, maintain profit consistency is required for that step.
Once all conditions are met, we issue a personalized trading agreement and upgrade your account size.
And the best part, with a bigger account, you are earning more without increasing your risk per trade. That's real capital leverage. And the common pitfalls to avoid, let me be real for a second. The most common mistake over trading to force the target. Trader push too hard to trying to scale fast and end up violating drawdown.
Another one, ignoring consistency in the early levels. If you make 80% of your profit in one day, that payout won't qualify. You need to spread your wins.
And suppose not planning your growth, you should know what your next scale target is and trade in a way that's prepared for it. Don't just trade for today, trade for level 7.
Scaling isn't just financial, it's mental. Every level brings more capital, but also more responsibility. If you are trading 10,000, how will you handle 300,000?
Exactly, that's why the scale is step by step. We test your psychology, your discipline, and your patience long before we hand you 7-figure capital.
And that's what makes it real fun trading, not a more hype, not a grimace, it's structural capital later for real trading.
So if you are wondering whether it's worth staying consistent, passing challenges, and trading patiently, this is your answer. From 10,000 to 1 million is possible, and it's been done repeatedly by WeMasterTrade traders.
It starts with one rule following profit making discipline money, then we grow it.
So take your time, learn the structures, repeat the rule because here's at WeMasterTrade, when we say we scale performance, we mean it. And with that, we wrap up the full walkthrough of WeMasterTrade funding system from account setup to risk management to scale up, whether you are starting with 10,000 or 200,000, the road to 1 million is real. So coming up next, before we end this incredible section, we want to bring everything full cycles because today wasn't just about telling how WeMasterTrade works. It's about showing you what's it meant to trade with quality, capital, and with confidence. Here's in trading news today.
Uh, the first news is the British pound GBP. The sharp price index came out higher than expected. Price went up 0.7%. That's a sign of inflation and usually support the pound. Money supply also increased slightly. Nothing major here. What mortgage approvals stay the same. Not much change in that sector. But the big one leading to individual jumps from 2.9 to 3.7 billion. That shows people are borrowing more, a sign of economic confidence, which is good for the pound. About the US dollar, USD trade deficit widened from minus 96 to minus 98 billion. That means the US imported more than it exported, which isn't great for the dollar. Inventory dropped slightly but less than expected, kind of neutral. Housing prices are still falling but not as fast as before. The Case-Shiller index showed home prices rose 2.9%, which is lower than forecast. That's a sign of cooling in the housing market. And a key one, job opening fell from 7.77 million to 7.51 million. That's a sign of the job market might be slowing. Not good for the dollar. On the flip side, consumer confidence jumped. People are feeling more optimistic, and that's helped the dollar.
What it means? The pound is looking strong today, mostly from good lending data and rising prices. The dollar emits some sign of weakness, especially in jobs and trade, but the confidence is up. So if you are watching GBP USD, you might see some move depending on which side take the lead.
So that's it for today's live stream. Thank you so much for tuning in. Until next time, and take care.